Markets dropped hard in the final 15 minutes. Was it a warning shot or just noise? Welcome to Daily Market Waves by Investing Angles, where every candle speaks, every Elliott Wave whispers, and we chart the turn before the herd even blinks. Today's lineup: Volatility. We warned you yesterday, didn't we? Dollar. Is the bottom officially behind us? Bonds and TOT. TOT stumbled hard in the final stretch yesterday. Was it the canary in the coal mine? Gold, is it done? Or is there more drama ahead? Silver, a curious monthly print worth a closer look. Uranium, calm, controlled, and following the path. Natural gas, breakout or bluff? Oil, that bounce looked nice, but is it technically sound? SP 500, multi-angle breakdown with live Elliott Wave dissection of the final minutes. Nasdaq, if you caught our Discord or Twitter warning this morning, you are not surprised. Feature of the day: United Health. Elliott Wave is inconclusive, but the stats might say more. And today we start, as usual, with our volatility index. So, what do we have today? The daily closure. Until the final minutes, the candle was bearish on the index chart, and it was somewhat similar on the futures. However, the last 15 minutes turned the table, and right now we are looking for a bullish candle here, and we are looking for a potential bullish Harami on the daily frame. And if we look at the weekly, no changes here. So this is potential for a rising three methods, and tomorrow we'll see how it goes. The same thing here. So the three failures, the three red failures to close below the low of the green candle. Now the odds are bullish. Let's see how it closes tomorrow. And our Elliott Wave chart, well, so far it is on track, and we are not seeing any reasons to change it. The only thing that we might need to adjust a bottom just a little bit, but we'll see whether tomorrow we'll have another lower low before the move down, before the move up starts. That's volatility, and yesterday, you remember, it was a failure. So now we are seeing the results. Let's talk now about the dollar index. So the dollar, no surprises here. Technically, it's nothing to discuss. With the candle like this, we are going to have a daily confirmation of this little bottom here, and most likely a confirmation of a bigger formation. Potentially, this could be an inverse head and shoulders. And on the weekly frame, if dollar pushes just a little higher here above this high of this red candle, it would be a confirmed reversal on the thrusting line. Well, that's encouraging for the dollar holders. Now let's have a look at the bigger picture here. So no changes here, no surprises. If dollar forms a bottom here and starts moving higher, it will be technically as expected, and we would say that it's finished in an ideal target area. So this is the chart that I discussed earlier with our subscribers in our weekly review for the dollar. So far, it looks like we see the very first impulse up. Now we have wave down, so the blue count obviously is invalidated because of a lower low, and now we only have the red one, and this would be wave 2. And now it is time to make some adjustments. Let's see how it closes tomorrow. If it confirms the weekly reversal, we will definitely project the next move, the next targeted move for wave 3. So that's, so far, dollar is on track. And if we look at the bigger picture, all-time practically this is what we are seeing here. Today is May 1st, and potentially dollar is completing a bullish flag here. So once we know that this is indeed complete, we might adjust it a little bit and maybe adjust the targets based on the bottom of this flag. So that's everything about dollar I wanted to say today, and now let's move on to the bond market and its counterpart TOT. So the bond market is sound and clear today. Most likely the 30-year yield and 20-year yield are going to confirm a reversal here on the bottom. So if they close like this, so the day 10-year yield is not far behind, and the 2 and 5-year yields are forming strong bullish engulfing candles here. So that's practically a reversal. If we see a very strong candle tomorrow on the weekly frame, this would be the beginning of something bigger. If this is the 10-year, so far the candle is bullish, but it's not confirmed. We would need to see another strong move tomorrow. The weekly is shaping up as it is a ladder bottom. Plus, if we add this green candle, we might have a good setup for a rising 3 methods. And I'm talking about this perspective. So maybe this is, if this is a classical move here, we might see something really strong. And I'd like to show you this. So this is potentially the candle that we might see next right here. So this is, it's too big, I would say, but we would make it smaller. So something like this. This would be a classical rising 3 methods. Let's see how it goes and what the next move would be. So the next week could be very interesting one. And we remember that this is the Federal Reserve week, so they are announcing the next rate. Now let's talk about the 20-year yield. This is the short-term perspective. We were talking previously about potential impulse here. Wave A, B, C. Wave C potentially an ending diagonal. And if it is indeed an ending diagonal, we should see a very strong move towards the beginning of wave C here, or the end of wave B, or even higher. And this would be the potential target. I might just need to make a little adjustment. So this would be target for 3. This would be target for 4. Well, that's the perspective for 20-year. And now let's talk about TOT. So TOT is clear today, very clear. So now we have a Harami candle, and today is a clear confirmation of a reversal on Harami. So no questions asked. And having this in mind, the weekly closure most likely is going to be bearish. Whether it forms a green candle or a red candle, as long as it stays below the high of this red candle, it will be bearish. And just for information, yesterday we had a bearish closure on the monthly frame. Speaking about this particular chart, remember that TOT made a very bad move yesterday by overlapping, making overlap. Today it made an even bigger overlap, and I'd like to say that the purple count right now is primary, and it looks like TLT is shaping as an impulsive wave downward here. So far the wave is a bit young, and we need to see a few more turns before we can start doing projections. But the chances for a continued move and seeking lower low below 84.85 would be significant. Now let's move on to the commodities, and today we start with gold. So what is happening right now as we speak? So this is the daily frame. We have a daily confirmation. If this candle closes like this, it will be clear bearish daily continuation candle. And I would be looking for lower lows. And if we flip to the 3-day chart like this, well, and I already placed this level here. So if gold closes today below this level, it would be a confirmation of a top, most likely a tower top formation. And this would greatly elevate the bearish odds and increase the bearish momentum. And in this case, this formation might become reality tomorrow. If gold closes tomorrow below this level, it would be a reversal on the weekly frame. And after that, I would be looking at it very critically and looking for extending bearish momentum. Now let's have a look at the Elliott waves. So this is the perspective that we discussed just a few days ago, saying that gold might form a bigger wave B, or this top here could be wave 2. So it looks like gold decided to move for a faster pass, and potentially it could be forming wave 3 right now. At least I am seeing some technical support for this one. And the wave 3 would need to go a little lower here. So this is potentially wave 303, and then a bounce for 4 and 5. But I would like to emphasize that in our case, we are dealing with commodity, and for commodities, wave 5 could be the longest. And we need to be very cautious about it. So that's the perspective for short term. And now let's have a look at the next one. So this is the MACD cross that we discussed a few days ago, and this was a record one. The second biggest one happened in 1980s, and now it looks like gold is going to increase the momentum here. So this is the 2-day frame, and what we are seeing here is also a record MACD cross, but only on the 2-day frame. So it is going, well, if gold moves a little lower, this cross might happen tomorrow. If not, I would say it is a matter of one more period. In this case, Monday or Tuesday. And we would be monitoring it. Let's see how it builds the momentum here. And the final discussion about gold is this one, and this is no less interesting. First of all, I'd like to say that GLD confirmed a reversal on the 2-day frame today. That's done. And the next one would be the weekly. So in order to confirm the weekly reversal, it needs to close below this low tomorrow. Let me measure it and see what it is. It is 294.53. Okay, 294.53 and 450.53. So now we have a clear message. So if it closes, if GLD closes below this level tomorrow, it will be a confirmation of a top on the weekly frame. And speaking about the daily frame, it's very interesting either. So first of all, I'd like to say that this is still might be a, you see this little candle that it formed today. So this one, this is a little doji, and it is below very critical support levels. So most likely it is a continuation doji. And another dangerous thing here that now we have two gaps. So this is one gap, and this is clearly another one. So these are very strong resistance, and I'm still thinking about this potential island. But this double gap here, I'm not sure I remember seeing it before. I still need to monitor. I think it will go into my collection of patterns. So I'd like to say it's a possibility of a double resistance here. So if this is an island and we are looking for a very strong move down here, somewhere here. Well, but the move will be measured later, and once we have more information. So that's about gold. And oh, this is a nice gold coin that Canadian bank minted in 2020. Well, I'm just preparing for the next couple of sessions depending on how it goes, especially if gold confirms a weekly reversal tomorrow. Now let's move on and talk about silver. So silver, it made a very important and critical move yesterday. If you remember the discussion, a closure below this line on the monthly frame would mean bearish. And it closed just a few basis points below the line, technically forming a dark cloud cover and a huge hanging man or a hammer at the same time. So I would say that silver is bearish on the monthly right now. And another closure yesterday was on the 4 months frame. I'd like also to emphasize this one. This is an inside candle, big inside candle inside of this huge doji, and this is also bearish. Speaking about shorter term frames, today is a 3-day frame closure, and while the daily, what is daily? Daily is bearish, but it's not extremely bearish, it's moderately bearish. However, if it closes below 32.107 in 51 minutes, it's going to be a confirmation on the 3-day frame. And if silver makes a weekly closure like this tomorrow, well, at this point, at this level or lower, it will be bearish engulfing. No doubts, it is going to be down next week. Now let's talk about charts. So first of all, this chart, it's still undecided. There is a still possibility of making 1, 2 and moving higher. However, if we look at the smaller term, the smaller frames chart, so this potential impulse down, this wave could be a bullish, bearish flag. However, it is not very clean with the counts here. So you can see there are still 4 potential counts I'm tracking here. So I'm leaning right now towards this move as wave B of a bigger corrective action here, but still I don't have any very strong support. So I'm talking about this one, and this will be in blue. So this potential move I'm looking, but the green is still on the table, and the immediate move down as wave C or wave C in red, or potential even finding even building an impulse, it's also on the table. The only thing that right now this wave doesn't look extremely impulsive, so it's more like corrective, and that's why I'm leaning towards either green count or the blue one. And if we look at SLV, so we are seeing it's much more cleaner at this point. So first of all, I'd like to say that it's confirmed a reversal on the 2-day frame today with a closure like this. So the 2-day is confirmed, and the weekly has a very good chance to form a bearish engulfing after an advanced block. And this together would be a following 3 methods. And the monthly frame, again, a hammer, but this is a Harami, big Harami candle. So the chances for move down are significant. However, with the Harami, we might see a higher high before it is confirmed. That's all about silver. Now let's move on to the next commodity, and this is uranium. So just a quick message. No surprises here. Uranium is moving higher. However, this candle is red, but it's not decided yet. So it's most likely a neutral doji. If you look at the 2-day frame, it's a bullish engulfing with good chances to move higher in the next couple of days. So if this is happening, then most likely this weekly candle will be either completely negated or highly mitigated in their odds. So, and on the monthly frame, we have a bullish engulfing, and this is a very positive sign. Speaking about the Elliott waves, this is the chart that we discussed yesterday. No changes here. The only thing we need to see a confirmation of this particular bottom. If it is confirmed in the next couple of days, potentially next week, then we would be looking for wave 3, and I would be doing measurements at the same time. Well, that's a quick update on uranium. The next one is natural gas. Natural gas, no surprises here. As I said yesterday, this candle was technically bullish continuation, and now we are seeing another one being built, a strong green one. And if the momentum holds like this, the weekly reversal will be a done deal. Speaking about Elliott waves, more we are moving higher, and more I'm thinking either green or red count. So still need to see how this wave develops, whether it's impulsive or corrective, because it could be a different story. For example, for wave 5 of 1, which is in the diagonal, we need to see just a 3 wave, and each of them could be corrective, but for wave 3 we need to have an impulse, something like this. So that's the difference, and I need just maybe a few more days until we get more data, and would be able to project it with better precision. All right, so that's the perspective. And for on the short term, it looks like this wave is impulsive, so maybe it's just a 1-2 of a bigger wave. However, knowing natural gas, I wouldn't be surprised like a bigger drop here. This is wave 1, wave 2, and then wave 3. So be cautious about this possibility. And now let's talk about the final commodity, and this is oil. So oil, until the final minutes of today's trade, it was kind of building a bullish candle here, trying to negate this formation, three black crows. However, in the final 15 minutes, it pushed lower, and now it's a neutral doji. Could be a Harami, but I'm not seeing a lot of technical support for this candle here. If we look at the 3-day closure, it's clearly bearish continuation. No questions here. And if no strong rally tomorrow happens, then we are looking for a weekly continuation, bearish continuation. And speaking about the Elliott waves, so this is the chart that we shared a while ago, I think a week ago. So far, this is the wave 3 potentially in works, and I would like to say maybe it will extend to here, potentially alternative 3, just to make it a little longer. So far, technical support, a continued move down. Well, that's the target, the minimum target, and the potential target for the entire wave 3. That's all about oil, and we will discuss it at a greater length including long-term charts in our weekly report. All right, so a quick checkpoint. If this breakdown for commodities has helped clarify the direction or risks, let me know by tapping the like button. It's a small signal, but it helps more than you think. Now let's back to the chart. And the next we are talking about is S&P 500. So until the final 15 minutes, the candles were strong bullish continuation ones. However, something happened and bears pushed, and now we are looking at the potential spinning tops for all candles, and for S&P 500, Nasdaq, and Dow Jones. Russell is slightly different, so I said that this build up of now 6 candles is not healthy, and again the candle failed to close at a new higher high. So this is technically bearish. It's just pushing the bearish wave a little higher. So this closure on the daily frame was bearish. Now let's have a look at this one. This is the futures, and in the morning I shared on the Discord and on Twitter saying that this 4-hour candle for futures is not healthy, and we might see a follow-up, and the next candle failed to negate the candle, and the final closing one was kind of much stronger bearish. And if you look at the daily closure, again we are seeing a failure to close above yesterday's high here, and also for Nasdaq, and I think, yes, this is the same for Dow Jones. And now we are here, we can see here a very clean advance block, last 3 candles. And for Russell, yes, the candle had a chance but failed to negate this dark cloud cover that we received yesterday. So the odds are bearish here. And one more thing I would like to emphasize about S&P 500. Just count how many candles we have in a row. 1, 2, 3, 4, 5, 6, 7, 8. We know that 8 to 10 candles, green candles in a row, it's a dangerous stretch from the candles perspective. We would be looking for a reversal any moment. Well, that's the perspective from the candles. Now let's have a look at the weekly frame. Weekly frame is an interesting position, so we need to know. So this would be the confirmation of reversal on the weekly frame for S&P 500. For SPY, it's high, it's 567.42. You put it 567.42. 567.42. So it needs to close above this level in order to form a bottom on the weekly frame. So Nasdaq right now is slightly higher, so it's gonna be a battle tomorrow. If it closes below this level, it will be indeed very strong bearish closure. If it closes higher, then we might see some moves higher. Dow Jones, well, for Dow Jones, I think this is kind of, is it possible? Well, I think it's impossible. It needs to rally about 4% in order to form a bottom on the weekly frame. And Russell, well, this is in the same position, so let's measure it approximately. So it needs to rally about 3.75 in order to close on the bottom for the weekly frame. Well, I would say it's going to be a very challenging tomorrow, especially for Nasdaq and S&P 500. So I would say that for Dow Jones and Russell, it's kind of decided already, but these two might be fighting back. Now let's move on to the next chart, and this is our Elliott Wave figure projection, something that we discussed way back in April 22nd. I would say that right now I'm satisfied because it is right ideally in the ideal target, right in the intersection here. So technically we can say that this wave is complete, and now we might see a very strong move down. Whether it's gonna be a bearish wave, corrective wave B of a bigger B, or an immediate impulse down, this is something that we are going to check right now. So let's move on to the next one, and this is the short-term frame. As we discussed, wave A, wave B, and now what we are looking is for wave C completed as an ending diagonal in an ideal target. Now let's have a look at the wave that S&P formed today. What is interesting here? So first of all, we can see a very clean impulse here. So this is the first impulse down. And now the wave up was corrective clearly. So we can say that this was potentially wave 1, or at this point we don't know. This could be wave A. Let's give it another color. So this is either wave 1 or wave A. So this was clearly a corrective flag. So this is either wave 2 or wave B. So now we were looking for the next one, and this could be wave 3. Let's try to find approximately its length. So I would say for wave 3, normally it would be somewhere here. Wave C would be shorter. I would say this would be it for wave C. If it goes lower at this point and makes another impulse, 1, 2, 3, 4, and 5, this would be wave 3 of a potentially larger impulse, and this would be wave 4, and somewhere here would be wave 5. So technically from timing perspective, I think that the first impulse could be done overnight or maybe tomorrow morning, and we might see after the impulse done, we would be looking for a corrective wave ABC, something like this, and it might take the beginning of next week. Okay. And after that we would be looking for a stronger wave down. Well, that's the projection, just a ballpark, very preliminary. Let's see how it closes, because there are still quite a few assumptions here. First of all, we need to see a very strong impulsive wave for completing wave 3. Well, that's the perspective. Now let's move on and assess the sectors. So the same thing as happened for the index. Until the last minute, financial, technology, and industrials were forming very nice bullish candles. However, something happened, and the financials were not able to form to close above the yesterday's high. XLK technology formed a hammer and potentially spinning top for industrials. And now tell me that this was the 100 over 200 days death cross was just happened for a cause. No, I think it was for a real reason. And this is something that we are seeing right now. Potentially it could be a reversal candle. So this is consumer staples. it's technically neutral bearish. Utilities are also neutral bearish. Healthcare is obviously bearish, no questions about it. Even consumer discretionary right now are questionable, and energy, it tried very hard, but it failed strongly. So it had a chance to form a bullish engulfing here, but right now it's back to a thrusting line, which is a bearish continuation candle. No surprises here. Speaking about the larger companies, the large caps, so Microsoft started very nicely today, but now it is having a hammer, and it is above the Bollinger Bands. So I think the message is clear. We will see Microsoft going down, and it looks like this would be a good candidate for a weekly special to chart Microsoft and the perspectives here. Meta is similar thing, so it's a very strong bearish candle, and I'm not expecting it to move higher. So the Amazon is still undecided, so it can turn bearish or bullish depending on the confirmation. Nvidia, most likely it's bearish. It's a huge bearish pressure here. Apple failed by just a little bit to close above the yesterday's high, and Tesla is somewhat neutral at this point. The only one which is clearly bullish here is Alphabet or Google. So potentially this is a bullish reversal. Let's see how it closes tomorrow, the week. What about the weekly candle? Well, it still has a fairly nice chance after strong bullish engulfing. Could be a neutral candle, another bullish push higher. So Google is in a good position. Berkshire Hathaway, the Buffett's company, so it is neutral, and we remember that it closed monthly with a potential strong bearish reversal candles. That's all about large caps. Now let's move on to Nasdaq. So this is the chart that I shared earlier today on Twitter and on Discord, saying that Nasdaq potentially formed a top here because of the first impulse and wave 2, potentially wave 2 as a bearish flag, and no surprises here. So now we have a strong wave down, and it has a chance to form wave 3, somewhat similar, by the way, that we just discussed with you on SP 500. So if this happens, if we see a lower low after opening today in 30 minutes, then we would be looking for wave 4 and another wave 5. So this wave 4 might take some time, and another wave 5 would be down there. That would be an interesting formation. Once we have this impulse down, obviously we would be looking for a corrective wave up, and this would be a gentleman's exit for this particular move, particular big leg, potential big leg down. That's all I wanted to say. Oh, that's not all I wanted to say about Nasdaq. So this is the chart that we've been tracking for a while, and right now I am satisfied with this particular move into the target area just above the 20,000. Now it's a classical, potentially classical zigzag, ABC here, and an ending diagonal, potentially ending diagonal for wave C. Let's see how it reacts down. So far we are seeing that the initial wave can potentially form a very strong impulse. Now that's it for Nasdaq, and the feature of the day is United Health. So and before we move on, just a quick checkpoint. If this insight so far matches what you're seeing, or even if you disagree, drop a quick note in the comments, and I'd love to hear your take on this. United Health. So the closure of the month was obviously strongly bullish. So this is this chart I'm talking about. And now we have a very strong 8x20 EMA bearish cross with a very good chances to move lower. And just to give a quick review what we discussed before, this is the annual chart for United Health. We can see 14 years of continuous move higher. From the candles perspective, this is an extreme stretch. And now what we had in 2024, we had a bearish engulfing on the annual frame, and now we are seeing the consequences of this move. And at that time, I estimated a drop somewhat between 33 and 55% at the closure of the year. So far, we are seeing that, well, it's already more than 33%. And if we look at the bigger time frame, this was our discussion at the end of February when we were saying that United Health is about to form a very significant 8x20 EMA bearish cross, and this cross happened only a few times in the history, 96, 98, and 2008, and all these times were led to significant declines, and an average decline would be about 50%. And I charted this target here, and so far it is on track. I think that the minimum target would be 320, 230 is a maximum one. However, it's not limited here from the perspective of Elliott waves. And if we look at this chart that I discussed last time on April 17th, so what we can see here is that huge gap that United Health formed. It's not helping here, and most likely this wave is wave B, and the wave down that we are looking for is an impulsive wave. However, it is very difficult to say because of the huge gap. So this wave 3, I just looked some technical indicators. It looks like this wave 3 is not done yet, and I would be looking for something like this. The question is how what kind of wave and how it executes the wave 4 here. This is in blue count, wave 4, and potentially the wave 5 could be either a diagonal or a clear impulse. Clear impulse would be something like this, but a diagonal might take half a year or even longer. So that would be my projection at this moment. So far, United Health is bearish, and after a monthly closure like this one, it is bearish indeed. And if we look at the 2 months frame, a very clean bearish closure, and the looming, it's not looming, it's already made 8x20 EMA bearish cross, and the 4 months frame, technically it confirmed a top. This was a bearish dark cloud cover, and now we have a confirmation breaking through support lines. I would say the next 4 months will definitely be bearish. The question is whether it's going to continue further down, or they might find a bottom in the middle of this period. Well, that's the perspective, and the final thing that I'd like to make here is just to say that today is May 1st, 2025. And let me wrap it up. So, today's close just rewrote the script. Across sectors, commodities, and the indices, the volatility spike, bond confusion, and gold's hesitation may be early signals. Markets are shifting, and now more than ever, structure and timing matter. If you found value in how we track the turns before the crowd catches on, this is the time to subscribe. We are building a community of traders who rely on deep technical signals, not headlines. Starting May 1st, today, daily episodes will release to subscribers first, up to 3 days before the public sees them. The weekly digest will be members only for a full week. Click the join button below any video and choose a tier that fits your focus. Early access starts right away. At Investing angles we don't follow, we forecast. Stay sharp, stay objective. See you in the next wave.